Maintain the strict stop loss of 1100.
Now, me to interrupt you, Ujjivan Financial. We've got Sudha Suresh, CFO, joining in, and congratulations on a strong set of numbers. What have been the drivers?
Thank you so much. It has been a great year, and the year has been driven by all-around parameters, which is increase in our branches, increase in our business, specifically in the MSE and housing business. We have increased productivity, increase in all-around efficiency, and that's resulted in the great numbers that we have been able to put up. So we have our gross AUM at about 5,388 crores, which is up 64% from the last year gross AUM of 3,274 crores. We have our PAT, which has moved from 75 crores to 177 crores, which is again a great 133% up. And I think it's been a great year all around. Of course, we also moved ahead on the IPO in the financial year and completed a pre-IPO round, and the IPO followed later to close in May.
Okay, you now, of course, are transitioning towards becoming a small finance bank. And if you can tell us, what is the growth plan on AUM book, and where do you see your AUM book over the next 12 years from the current AUM of about 5,388 crore rupees?
Okay. So, yes, we are in the process of transition to an SFB, and in the initial years of transition, we would definitely look at a growth which could be pegged anywhere between 30-35%. And once the bank transition and transformation is complete, we would look at an excellent growth period for the small finance bank, starting from the period 2019 to almost about 2025. So we have a great going in terms of our business plans for 5 years and more. And we are also looking at a significant growth in our two verticals, which is going to be the MSE, the micro entrepreneur lending, and also the housing. As much as we have a very well-set microfinance business going, we will see the other two verticals grow over a period of the next 5 to 10 years.
Okay, now your microfinance book, how do you see that product mix changing on the lending side over the next 1 to 2 years?
So our microfinance business will definitely continue to grow. We have set products in the microfinance business. We have business loans, we have other income generating loans, we have agri loans, we have livestock loans. I think all these products will continue. Some of them would grow definitely in the next few years as we focus on them. And by and large, the microfinance business will definitely show a steady growth over the next few years.
Okay. Let's also talk about your liability, and how will you be building your liability side book on retail side as well as wholesale borrowings, and what will be the mix here?
Yeah. So for the SFB, one of the key focus areas would be to build on the liability side. We have one parameter which is to build on our CASAs. Definitely CASAs would take some time. With 3 million customers and more coming in, we are confident that we'll be able to build a credible SA over the next couple of years. And further, as we increase our lending to the micro entrepreneur business, we will definitely see also the CA building up. CASA building definitely will take some time. Parallelly, we are also looking at building our deposit franchise. We will look at building on simple products, which could include term deposits, recurring deposits, and some variations. And the segment that we propose to target includes one, the current segment that we are working with. It would also include the new segment which is going to come up, which is the micro entrepreneur segment and business. The third segment that we would be targeting could definitely be a notch or two above the current segment, and those could be the ones who are currently saving in the unorganized sector, but whom we hope to attract with our financial literacy training, awareness, and good performance. Also with the focus in terms of our channels and servicing, where we are looking at easy access, courteous service, hassle-free service, as also building in that kind of trust and confidentiality. We propose to garner some share of the market which is currently in the unorganized sector in terms of savings.
You spoke about your NIMs having expanded pretty smartly, 70 basis points to 12.3%. How do you see your yields and cost of funds changing post the transition to SFB? And by how much do you see your margins on the back of this coming down?
So over the next few years, specifically in the SFB or the banking regime, we will see the cost of funds definitely coming down. So already we have seen a decline in the last financial year and also in the current financial year. We will see that further decline in the banking regime by at least 150 to 200 basis points. On the other hand, we will also see maybe some of our operating expenses grow up. So that has to be taken into account in the next 2 years, where we are heavily investing both in terms of IT and infrastructure. We would see that NIMs largely could be, more or less steady in the next few years, or could marginally come down. But we will see that again from 2018-19, where the growth picks up, we will see the NIMs again growing back in a very short span of time.
Okay.
Also, in terms of the yields that we see, we will see that the yields could largely remain the same. Yeah, but over a period, we would look at passing on the benefit of the lower cost of funding. We would also look at passing that benefit to our customers.
Okay, fair enough, and we wish you all the best for that. Thanks very much for taking the time out and sharing your business outlook with us on Hot Stocks. Well, that's the management of Ujjivan Financials, and the stock is clearly doing very well in today's session, 14% higher and counting. Let's slip into a short break at this point of time, but we have lots more lined up on the other side.